All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Wednesday, everybody. Today's September 25th, 2024. And the top story this morning is the car market. The rapidly shrinking, struggling, flailing, foundering, whatever you want to call it, car market. What a mess going on. We've got two stories in automotive this morning. The first was a big one. Shout out to my friends at Macro Edge who caught this one within seconds of the announcement, as usual. Macro Edge does excellent work, by the way. Stellantis has announced mass layoffs. The language that they're using, indefinite layoffs of represented employees across its footprint. Some pretty strong language there. Indefinite. Okay, well, gee, that sounds kind of permanent. It sounds like you're firing people. Represented employees. So they are targeting UAW here. The union guys are getting layoffs, and it is across the company's footprint. Now, that's some pretty strong language. No numbers. They didn't say 10,000, 4,000, 3,000, but indefinite layoffs of represented employees across the whole footprint. It's going to be a big number, guys. It's going to be somewhere in the thousands. We don't know yet. There are already anecdotes of specific facilities seeing several hundred layoffs at those. Surprisingly, nothing about this in the mainstream press this morning. I had to go to Detroit Free Press to find anything about it. Nothing CNBC, nothing Bloomberg, nothing Wall Street Journal, Barron's. Mass layoffs in the auto industry is a pretty big deal. It's typically been the calling card of a economy going into recession. So I find it a little sus that there is no mention of this. This is a pretty big story. And, I was talking this over with Mish in our phone call that we do every morning, our little briefing we do before we go live. And, we both agreed this is probably the biggest story in finance right now. And there is bupkis about it in the mainstream financial press. So keep an eye on that. Oh, and by the way, on the same day when we're talking about mass layoffs at Stellantis, we got Morgan Stanley coming out with a downgrade of General Motors, Ford, and Rivian. All three getting downgraded all at once. A number of concerns like cost pressures, like struggling consumers is being mentioned. Competition from vehicles in China, not necessarily making it to U.S. shores, but displacing some U.S. cars in other markets perhaps. And of course, the problem of inventory buildup at dealerships nationwide, leading to the downgrade of all three of those companies today. And guys, I would also remind you, it was about a week and a half ago, I did that video about Ally Financial and how people are not making their car payments, how they're seeing this big surge in delinquencies in auto loans and how they expect it to get worse. So take all these stories as a whole. The car market is a mess. And you can see it. You can see it in CPI. New vehicle prices have started to fall. We actually got a few negative numbers for new vehicle prices. And used car prices have just been an absolute free fall, seeing double-digit declines in price for more than a year now. So the car market's a mess, guys. And, it's got me thinking, are we going to be seeing cash for clunkers 2.0? I mean, are we going to just go to like handing taxpayer dollars out to people so they can buy cars in order to prop up the auto industry again? I mean, for some reason, that program was wildly popular last time around, even though it's basically corporate welfare. But I would not be surprised to see that making a comeback, especially with stories like we're getting this morning. And, we were talking about cars. That's a major line item in the average family's budget. Let's talk about houses and shelter, the largest item in the average household's budget. The 30-year mortgage dropped another 2 basis points last week. So the average 30-year mortgage rate is now 6.13%, down from 6.15% last week. We have seen some major declines in mortgage rates, down from highs over 7% seen in the last few months. But little hint, it's not really home buyers. All right, we're seeing a big surge, an 11% surge in mortgage applications last week. Another double-digit increase in applications for mortgages, but it's not the buyers, guys. The housing market is still frozen solid. We'll get into the nitty-gritty of that. There is a refi boom going on in this market, and that's pretty crazy to me because 6.13% is still an astronomically high mortgage rate compared to what we saw in the previous year. So who are all these people that are refinancing into 6% mortgages? I'd like to meet these people, find out what's going on, why they're doing it. I hope they're not using their homes as ATMs. Good God. And we got more news out of China today. Remember, we were talking about the stimmies yesterday. China's biggest stimulus package, the biggest package, we'll call it. China's big stimmies. They were lowering rates, more money for home loans to buy vacant apartments. And I remember noticing and say, hey, guys, they're stopping short of helicopter money. China doesn't do helicopter money. They don't outright print money and hand it to people like we did here in the States during the vid. Me and my big mouth, story out this morning. China is doing helicopter money. It's going to be targeted. The language they're using is they are helping the poor, the homeless, and the orphans. My, aren't the Chinese Communist Party members ever so benevolent? Of course, once you overlook the whole tens of millions of people they killed in the last century and the whole Cultural Revolution thing. But other than that, wow, look, they're taking care of the orphans. So we've got helicopter money in China. Who had that one in their 2020s bingo card? Also, the Chinese stock market is rallying like the blazes off of all the stimulus news. Up big 2 days ago, up big again last night. China is loving the stimmy packages. Caroline Ellison is going to jail. Sam Bankman-Fried's girlfriend / co-conspirator / partner in wholesale crime. She cut a deal. She ratted on her ex-boyfriend. I threw up in my mouth a little bit at the thought of those two. But she's still going to jail, even though she was a cooperating witness. And everybody's like, gosh, she sure seems sorry. I mean, she cried. Let's forget the fact that she stole billions of dollars. But the judge said, I cannot give a get-out-of-jail-free card in this instance because of the scope of the crime. But at the same time, you do have to go easy on cooperating witnesses because you want to incentivize future cooperating witnesses. And so a sentence of 2 years was handed down for Caroline Ellison for her role in the FTX scandal that stole billions of dollars via FTX and Alameda Research. And last but not least, we've got story from Southwest. They are cutting flights to Atlanta by 1/3. That's one of the busiest airports in the country. And we talked about this yesterday on the stream that Southwest Airlines was talking about difficult decisions ahead, i.e. layoffs are coming. Well, they're operating fewer flights out of one of the busiest regional airports in the country, in the world for that matter. Those layoffs are coming at Southwest. Gee, guys, that labor market, that strong and resilient labor market that I keep hearing so much about, there's an awful lot of stories suggesting maybe it's not so strong and maybe it's not so resilient. Why don't we shrink my big melon of a head and let's see what's going on in the market this morning, shall we? And don't forget that like button and the subscribe button right next to it if you're new here, because we do this every morning. So come have your coffee with the Melon Heads as we go through the top financial news of the day. Right now, the S&P 500 is up a paltry 1.5 points, 0.03% higher. I guess markets are just up because they're open. There's not really any good news in the economy this morning, but stocks are up, made all-time highs on a daily basis. What's the worst thing that could happen? The Dow is up 6 points or 0.01%. Again, just a tick positive. The NASDAQ, however, is in the red this morning, 18 points lower or 0.09% down for the NASDAQ. So mixed bag, but stocks are pretty much unchanged here this morning. We've got a slightly weaker dollar at 100.38 on the DXY. That's down about 10 basis points this morning and falling. That'll put some upward pressure on stock prices. And looking over at the bond market this morning, once again, yields higher on the long end of the yield curve every day since the Fed's rate cut. We have seen the 10-year and the 30-year move higher. Today is no exception. The 30-year Treasury, 4.115. That's up 2.5 basis points. The 10-year, 3.762. That's up about 2.5 points. The 2-year, meanwhile, 3.525. That's up a little less than half a point. And the 1-month Treasury at 4.679. Now, that's saying it's up a little bit, but that was 4.70 yesterday morning. So we're starting to see the 1 month. It's dipping below the Fed's overnight rate here. I guess the 1 month is already starting to pre-position for another rate cut next month at the next FOMC meeting, although I believe November. There's no FOMC in October. Don't quote me on that, but I believe November is the next meeting. So we're already starting to see 1 month T-bills start to tick a little bit lower, anticipating even more rate cuts from the Fed. J. Powell, go Burr. And looking over at the commodities board this morning, gold had just a ripping day yesterday. Right now, it's up again this morning. Another all-time high. Spot gold, $2,663. We just broke 2,600 a few days ago, and we are already well on our way to 2,700 here. Gold is up another 0.25% this morning. I like the shiny. Spot silver this morning, not doing quite as well, down 26 cents or 0.8% lower, but that's after a massive rally in silver prices yesterday. Spot silver right now, 31.83. At one point this morning, it was above $32. Check out this silver chart, guys. I love it. I would point out that we are coming up on the resistance from back in May. Remember, we were at these levels. We're pretty much right at that same level right now. So watch that all-important $32 mark. And on spot silver, mind you, we're about 20 cents shy of that right now, but we take that out. And, well, where do we go from there? Let's just zoom out, because if we break through this resistance, guys, I don't know, we got to set this to like 1 month candles if you really want to look. Yeah, so if we break through this resistance, where do we go from there? Well, next stop somewhere around $48, $50. So silver looking really good here this morning. Again, down a little bit, but after the day it had yesterday, not surprising. We've got copper's down a fraction of 1%. Copper up a fraction of 1%. Platinum is up about 0.25%. Palladium is down 1.33%. And WTI crude oil at $70.38. That's down about $1.18 this morning, or 1.6% lower. Now let's talk about oil, because oil has seen a little bit of a bounce in the last 2 weeks. We were down in the mid 60s. We rallied into the low 70s. Right now we're hovering right at $70. Now let's talk about this one, because while we're talking about oil rallying, keep in mind, guys, there's a little bit of artificial scarcity in the market right now because of this crisis in Libya. Libya crisis talks resume as oil blockade nears a second month. United Nations-led talks on Libya's central bank crisis resumed as a damaging oil blockade that slashed the OPEC members' output nears a second month. Representatives from the country's eastern and western administrations are attending Wednesday's round of negotiations in Tripoli. El Hadi El Sagir, how's my pronunciation? A Libyan member of parliament who's taking part told Bloomberg by text message. Now, daily output in the nation that's home to Africa's largest oil reserves fell to about 450,000 barrels in the weeks following the start of the blockade. That's down from more than 1 million before the crisis. Some exports, however, are still reaching global markets and even climbed again in the past week. But still, we're looking at Libyan oil output has been cut in half, more than cut in half by this crisis. So that has limited global supply. That's put some upward pressure on prices. And it's worth keeping in mind here. This isn't going to go on forever. If they are able to reach a deal, then we're going to see those oil prices come back down, because this is effectively the same thing as an OPEC production cut, right? This crisis in Libya. So there's going to be some additional supply at some point hitting the market. And if demand doesn't recover, and right now it doesn't look like demand is going to recover, then prices should be heading lower. Also on the commodities front, we've got Bitcoin is lower this morning on Coinbase by about $774. Still, though, trading at $63,502, up over the last 2 weeks. We've seen Bitcoin rally about $10,000. Taking a breather here. We'll see if we stall in the low 60s, or do we move up into the high 60s, maybe even challenge that 70,000 number from earlier this year. And I got a pretty good tweet here from Kobayashi Letter this morning. Shout out to my moderator, Mish, who caught this one. He does a pretty good job here of summarizing this market, guys. There's a lot of historical correlations that are breaking down right now. So just read all these bullet points and tell me, what is this telling us about the economy? All right, with the current situation here, stocks are rising like a soft landing has already happened. Gold is rising like we're in a major economic crisis. Bonds are falling like the Fed is done cutting rates, but real estate prices are rising like the rate cuts have just started. Oil prices are falling like demand is disappearing, but natural gas prices are rising like demand is growing. Nothing adds up here. A pretty good summary from Adam Kobayashi here. The state of things in the market. You've got just these diametrically opposed movements in certain asset prices that are supposed to be correlated or inversely correlated, but they're doing the opposite of what they're supposed to do. The gold making all-time highs every day. That is a big red flag here. I don't hear anybody in the mainstream press. None of the cheerleaders are addressing that elephant in the room. Gold is telling us inflation is going to come back, guys. That's what gold is telling us right now. People are pre-positioning for that. So it's just a mess. Let me know. is there some magic like stagflation or some magic word that suddenly makes all of these things fall into place and fit neatly into a nice little package? I don't know. But good thread here by Adam Kobayashi this morning. And once again, I got to give a shout out to Macro Edge, who put this one up last night. Again, these guys are really quick with the labor market data. They're one of the best out there. Highly recommend you follow at Macro Edge RES on X. They said Stellantis is planning indefinite mass layoffs of union-represented workers across its footprint and is cutting seasonal supplemental employees as well. This affects many of our U.S. manufacturing facilities, but we are not providing specific details. Now, this is from Macro Edge on Twitter, and this is why you got to follow these guys, because there's nothing about this in CNBC, in Bloomberg, in the Wall Street Journal, or Barron's, or Market Watch, or any of them. Nobody's talking about this. I had to go to the Detroit Free Press to find anything in any kind of news outlet about this story. Only the regional media is talking about it. So here we go, published late last night in Detroit Free Press. Stellantis plans UAW layoffs across its footprint, but provides no specifics. Stellantis is planning indefinite layoffs of union-represented workers across its footprint and is cutting seasonal supplemental employees as well. The total number of workers who will be affected was unclear as of Tuesday. It remains unclear as of this morning. This affects many of our U.S. manufacturing facilities, but we are not providing specific details, said the Stellantis spokeswoman. Recent social media posts indicate workers at numerous plants have either been told of cuts or are bracing for them. The company provided statements highlighting market conditions and vehicle affordability as the reasoning behind the layoffs. Now, here's the quote from the company. Stellantis is in full execution mode, focused on both protecting the company from the continued intense external market conditions and at the same time offering customers vehicles they can afford. By the way, soft landing, strong and resilient, best economy ever. How does that jibe with continued intense external market conditions? One of these things is wrong here. I don't know which one it is. As such, we are continuing to take the necessary actions to improve operations across our facilities. This includes ongoing assessments of our manufacturing processes to improve efficiency. While that effort continues, the company will be implementing indefinite layoffs of represented employees across its footprint. Now, guys, this is important because Stellantis has been going back and forth with the UAW for the last couple of weeks. Remember, the UAW is saying, hey, Stellantis, you're not holding up your end of the bargain. We had this near strike last fall. Remember, there was the big labor dispute, and the UAW got big raises out of that. And Stellantis made all kinds of promises about new production lines. And, you know, we're going to make this vehicle at this plant. We're definitely not going to lay anybody off. And, well, Stellantis has been not doing that, and the UAW is crying foul. So as the company is hurting here, as the auto market is really pulling back and prices are falling and inventory is building up because the consumer is out of money, keep in mind, the UAW may just say, you know what? Tough luck. You signed a deal. Pay us. This could end up in another labor dispute with the unions here. So keep an eye on this one, guys. This is a big deal, and I'm really surprised there's nothing about this in the mainstream press this morning. But I'm sure they're getting around to it eventually. Also in the auto industry this morning, this one, Morgan Stanley cuts auto industry view to neutral, downgrades GM, Ford, and Rivian. So they're cutting their outlook for the whole industry, downgrading three different stocks all at the same time. This one hot off the press this morning. Morgan Stanley has revised its outlook on the U.S. auto industry, lowering it from attractive to in line, citing headwinds such as rising inventory levels, affordability concerns, and increasing competitive pressures from China, which has shifted from being a source of demand to one of global oversupply. The report highlights that China's automotive industry is now producing around 9 million more units than it consumes, exerting pressure on global markets. Morgan Stanley warns that this excess capacity is likely to find its way into other regions, intensifying competition for U.S. automakers. Our downgrades to Ford and GM are underpinned by our expectation for greater share loss through end of decade, price mix headwinds, and China regulatory compliance, and EV, AV, ROW, other risk, which can impact profitability, driving lower normalized earnings and valuation, the analyst noted. By the way, just a note, when speaking of technical subject, always spell out what your acronyms stand for so people know what the heck you're talking about. EV, I'm guessing, is electric vehicle. AV, autonomous vehicle. ROW, I think that means rest of world. I think they're referring to like, hey, China's going to displace some GM sales in Angola or, all these other countries, something like that. So that's with Ford and GM. Now for Rivian, the downward revision reflects their incorporation of the capital intensity of autonomous vehicles and ADAS. Again, the acronym thing. I believe that's Advanced Driver Assistance Systems. I think that's what ADAS stands for. That may be required to fulfill the technological underpinnings that attracted Volkswagen as a joint venture partner. So they're basically saying, hey guys, these autonomous vehicle things, they're going to be outrageously expensive. I get it. You go on an analyst call and you talk about robo-taxis and driverless cars and the stock goes up. And then it's time to actually deliver. And it turns out that's really hard to do and really expensive. So finally, somebody is starting to ask questions like, hey, what's this crap going to cost? Better late than never. So let's just take a look at some of these stocks here. Stellantis is barely moving this morning, down about 5 cents here or 0.32% lower. Now, typically the market loves layoffs, and we're not seeing any movement in the stock here. Maybe that's because the market hasn't really heard about this yet. I don't know. $15.51 for Stellantis. We've got Ford, however, down another 2.3% this morning, trading at $10.62. That's down by about a quarter. So Ford stock having a rough year to date here. Ford is down from about $12 now, about 10.5. And General Motors is also down big, about almost 4% down ahead of the opening bell for GM here, trading at 46.17. That's down $1.90. Now, GM has actually had a pretty good year to date. GM stock is up at, it started the year around 36. Now it's at 48. So GM selling off a little bit. This stock maybe got a little ahead of itself. Keep an eye on this one, guys, because, if the auto industry is really headed for chaos like these Stellantis headlines are indicating, and GM's got a long way to fall here. So keep an eye on those. Now, let's talk a little bit about the housing market because we got more news in the housing market this morning. 30-year mortgage rate. The average contract interest rate for a 30-year fixed-rate mortgage with conforming loan balances declined by 2 basis points to 6.13% for the week ended September 20th, reaching a new low since September of 2022. This is a significant difference from the 7.41% rate seen a year ago. So here you can see the swing in mortgage rates, pretty substantial over the last year, right? We hit 7.9% in October of last year, almost 8% mortgage rates, now down to 6.1. So nearly a 2% decline in mortgage rates. Big drop here. Now, I would add, guys, that a lot of this drop in rates was based on the expectation of Fed rate cuts. Now that the rate cuts are here, mortgages actually aren't moving that much. So it looks like a lot of this dovish Fed was already priced in. Now let's talk about mortgage applications. What are we seeing in the mortgage market because of those lower rates? Not what you'd expect. Mortgage applications in the U.S. soared by 11% from the previous week in the period ending September 20th, extending the surge of 14.2% in the previous week to lift mortgage application volumes to their highest since June of 2022. So we are seeing a big surge in mortgage applications, but it's not buyers. That's the thing, guys. The buyers are still sitting this out. Look at this. Look at this down low here. Application volumes to refinance a home, which are more sensitive to short-term changes in interest rates, surged by 20% from the prior week. That is the second week in a row of high double-digit surges in refi applications. But in the meantime, applications to purchase a new home rose by just 1% in the same period. 20% bump in refis, paltry 1% increase in applications to buy a home. It's all refis, guys. Who is refinancing their mortgage into 6%? I mean, I'm just curious of all you guys watching, right? We got about 1,200 people watching right now. How many of you have refinanced your home into a 6 and change mortgage in the last year or so? And why are you doing it? Is this consolidating higher interest debt? Is this cash out? Are you putting work on the house, using the home as an ATM in order to do remodeling? What is driving all these people to refinance a home? Or is this just all the Airbnb door bros who bought 35 houses at 7% mortgage rates and now they're all just refinancing to try to shave a few $100 off of that monthly payment? I don't know what's going on here, but man, big surges week after week in refi applications, and it's just the buyers still. The market needs lower prices. The buyers are sitting this out, guys. Just 1% increase in applications to buy a home. That's just the applications, mind you, not even the actual closed contract. All right, let's shift gears now across the pond to China. China announces cash handouts for the poor and a rare use of aid. This is a pretty big departure once again from Xi Jinping's typical policy here. China is getting down with the helicopter money. China said it will give one-off cash handouts to people in extreme poverty before Tuesday in a rare announcement of direct aid just a day after unveiling a sweeping program to stimulate the world's second largest economy. The Ministry of Finance and the Ministry of Civil Affairs will issue living subsidies to disadvantaged groups, including the very poor and orphans, before the National Day holiday next week. The state broadcaster CCTV reported Wednesday without providing details. Local authorities should ensure the funds reach their target recipients before October 1st. Like they got a week to hand out money to a few million people. Good luck with that. The anniversary of the founding of the People's Republic to show the party and the government's love and care for people in need. My, aren't they just lovey-dovey over in communist China, overlooking the tens of millions of people that they've slaughtered? But yeah, love and care for the people. Ride that rocket, baby. While the amount is unknown, the deployment of one-time handouts within such a short period of time appears to be a departure for a government that has long eschewed what President Xi Jinping calls welfareism. The announcement came shortly after the country's top monetary and financial officials revealed a series of rate cuts and easing measures aimed at arresting an economic slowdown. And the market is just loving those easing measures aimed at helping with this slowdown. Chinese stocks extend gains after Beijing's stimulus bazooka. There it is, all you Keynesians in Western press. You've been asking for, 2-3 years now. Where's my China stimulus bazooka? Well, it's finally here. They finally acquiesced to your Keynesian modern monetary demands, helicopter money, stimmy bazookas. Chinese stocks on Wednesday extended their rally triggered by Beijing's monetary stimulus bazooka, though optimism elsewhere in the region could not be sustained. Hong Kong's Hang Seng Index added to Tuesday's 4.1% bounce with a 0.7% gain, while on the mainland, the CSI 300 index rose 1.5% following the previous session's 4.3% jump. The CSI 300 surge on Tuesday followed news of a large stimulus package launched by the People's Bank of China in conjunction with other ministries that was designed to revive the ailing housing sector, boost lending into the broader economy, and support equity prices. The measures represented the largest set of stimulus since the pandemic, with the stock market and the beleaguered property sector in particular focus, said Richard Hunter, head of markets at Interactive Investor. Of course, the measures will also come with a time lag before any benefits can be seen in the real economy, but the fact that the authorities have at least responded to a growing clamor from investors for economic support has been warmly received, Hunter added. All right. Got two more quick ones here. FTX fraudster Caroline Ellison sentenced to 2 years in prison and ordered to forfeit $11 billion. I wouldn't hold your breath on that $11 billion. I doubt she's got it, but she's going to jail, guys. There was a big question. Everybody was feeling sorry for Caroline. Oh, she cried in court and mean old Sam took advantage of her and she was being emotionally abused. Yeah, okay, I get all that stuff, but she also stole a few $1 billion, which is enough money to destroy the lives of tens of thousands of people. And gosh, I feel sorry about that. Should not be enough to keep you out of jail. But she also ratted on Sam. Sam was the big fish here, right? They really had to get Sam Bankman-Fried and his stupid hair and his cucumber-eating ways, send him off to prison, and he'd be like, oh, but I'm a vegan and I have autism. I can't go to jail. Suck it up, Buttercup. You're going in a cage. Well, she rolled over on Sam. Here's a question for you guys. This is a legitimate moral gray area question. What is the balance here? Was this a fair sentence? You have to leave a carrot at the end of that stick, right? There's got to be a carrot that encourages people to testify against the big fish and the masterminds. So in order to get people to testify, you have to be offering a lighter sentence. But at the same time, when you steal billions of dollars, how can you justify a lighter sentence for anybody who commits a crime on this scale? Let me know, guys. 2 years in prison. I mean, the prosecution and the defense were both asking for no jail time, and the judge here just went out and said, nope, this crime's too big, 2 years in jail. Let me know what you guys think. How do you strike that balance? How do you leave an incentive for future cooperating witnesses while at the same time being a deterrent for crimes of this magnitude? I'm going to go out on a limb and say there is no right answer here. Again, this is a dilemma, a choice between two lousy options. Caroline Ellison, no, she's getting off cheap here. 2 years in prison for destroying the lives of tens of thousands of people. Could have been a lot worse. Caroline, count your blessings. Good luck. Good luck selling your romance novels or whatever the hell you're doing now. All right. Also going on this morning, Southwest Airlines slashes Atlanta flights to stem losses. We were talking about this yesterday. Southwest will be laying people off soon. They were talking about difficult decisions ahead. And here they are already starting to take action. Southwest Airlines is ending nearly a third of its flights through Atlanta in an effort to eliminate unprofitable routes, the latest move by the carrier to improve operations amid pressure from an activist investor. The number of weekly Southwest flights to or from the city will drop to 381 as of April from 567 previously, the carrier said on Wednesday. Southwest will serve 21 cities from Atlanta after the changes, down from 37. The moves, partially offset by an expansion in Nashville and new red-eye flights to Hawaii, expand upon service changes announced earlier this year and other recent steps to revamp the business and bolster performance. The one-time Maverick airline is under pressure from activist Elliott Investment Management, Southwest's second-largest shareholder, to modernize its business and restore profits. So this one will almost certainly lead to layoffs in Atlanta, reducing the flight load there by 1/3. Again, guys, labor market not as strong as advertised. We have got more weakness building up in the labor market. And I just want to say thank you so much to Mr. Alex Lieberman. Thank you, Alex, for being a Melonhead member for 7 months. And he just says, Mel. That's what StreamYard puts up, but he's got the my melon, what do you call that? My melon emoji, my mel emojis. I don't know. Mel emoji sounds like a skin disease, doesn't it? Thank you very much, Alex. I appreciate the melon head emojis and the support of the channel, sir. Thank you for everything you do for the channel. I appreciate that very much. And thank you to Steve Woitis, who says, be sure to see NSF's video on consumer confidence from yesterday. You will get perspective and commentary not found in the MSM. Well, thank you so much, Steve. I do appreciate that. Look at that, a super chat to plug my own video. Steve, that's awesome. Thank you very much for the support and for plugging that video. You will find it at the top of the video feed for my channel or on my X account at JG_Nuke. Yeah, consumer confidence yesterday, it took a big dive, guys. It was the biggest drop in 3 years. I'll just give you the high-level stuff. You can watch the video if you want to get into the nitty-gritty of the details. But it was a pretty damning commentary on the economy. Consumers are now worried not just about the increase in the cost of living and inflation, but now they're starting to have worries about their job security, about their incomes actually going down. We're seeing a higher number of people expecting to make less money next year, fewer people expecting to make more money next year, more worries about employment, more people feeling bad about their family's economic situation, fewer people feeling good. Consumer confidence is falling fast here, although I'd add it's still off of its lows from a year ago. Consumer confidence was even lower at the height of the banking crisis last spring. But check out that video on Nobody Special Finance. And thank you very much, Steve Woitis. Appreciate the super chat and the support of the channel and the plug, sir. Thank you very much. And Aunt Janet's wig, a.k.a. Mr. West, with the Command and Conquer General's 0 hour icon there. He says, how do you plan on adjusting your T-bill and chill as the 1 month continues to drop? The stock market definitely is nowhere near on sale. I'm still in a couple of T-bills. I did buy a couple of 2 and 3 month T-bills in the last couple of weeks there, just to stretch out that higher yield before they crashed. So, that bought me a couple of more months of, those 5% yields, 5 and change. But I'll be honest with you right now, the 5.5 versus 5, or, what are we at, like 4.7 right now? I'm probably still going to stay in T-bills right now, just because 4.7% risk-free is still better than I'm going to do most other places. I'm still buying metals here and there, although even metals at all-time highs here, nothing is really on sale right now, Wes, to be honest with you. So, that's kind of been my thing. Also, I buy Bitcoin regularly. I buy a little bit every week. So, I'm still largely sitting in my reserves, gold, silver, Bitcoin, cash, and T-bills. I'm very defensively positioned. I guess you could argue that Bitcoin is a pretty risky, that's as much risk as I'm taking right now. But, the decline that we saw in rates really didn't change things. I extended my duration a little bit. I chased yield a little further out on the yield curve, but still measured in months, not in years. No chance, no big plans to change that approach just yet. Thank you very much, Wes, a.k.a. Aunt Janet's wig. Appreciate the super chat, sir. And thank you to the Chronicles of Redrift. He says, I'm rewatching House of Cards. It will be a true story in 6 months. I've not seen House of Cards. I can't comment. I'm not a big fan of what's the guy's name? Kevin Spacey. Yeah, sorry. People who lecture me on my own morality and then end up being sexual abusers and rapists, I try not to patronize their art if I can help it. So I haven't really seen House of Cards. Couldn't really tell you about it. By the way, I wonder what we're going to learn about Kevin Spacey with the whole P. Diddy thing, by the way. We've got another Hollywood blackmail archive with the whole Diddy's case. I mean, I don't want to get into that now because there's all kinds of buzzwords that I'll get my channel flagged. But Puff Daddy might get himself Epstein, guys. Just keep an eye on that story. That's out there. The tinfoil is thick with this one. So keep an eye on that, guys. Hollywood, newsflash, Hollywood is full of degenerates and sex abusers. I know some of you might be shocked. They love to make their little award speeches and lecture all of us about what terrible, deplorable people we are while they go do their whole rape pedophile thing. Yeah. Okay. I'll shut up now before I get my channel in trouble. Thank you very much, Chronicles of Redrift. And thank you to Water168 who says, please go over the natural gas chart. Thanks. Look, it's going to take me a while to set up the natural gas chart to get it up and running. And there's going to be a lot of dead air time if I do it. I will refer you to Doomberg did an excellent story about natural gas recently in his Substack. It was 2 weeks ago. I think he put that out. If you're not a Doomberg subscriber, you could also see he did a pretty good talk on that on, I believe it was Liberty and Finance is the YouTube channel that had Doomberg on a few weeks ago. We are seeing a big changeover in China from diesel in their big rig trucks to liquefied natural gas. And it is significant enough that we're starting to see the gap close. Natural gas is so cheap in the United States. We literally just light it on fire and burn it up into the atmosphere in so many places. Because we can't build pipelines in the U.S., all the idiots with the pink hair will come out of the woodwork and start camping in the woods and leave all their oil-based plastic behind in the garbage when their little protest is done for someone else to clean up because of the environment. But since you can't get pipelines built in the U.S., we literally just burn off natural gas that comes out of the ground while we're looking for oil. Natural gas is so cheap in the U.S., it's something like, I forget the statistic Doomberg used, but it's like $12 a barrel equivalent oil is what we're paying for natural gas right now, or what they're paying over in China. So you're seeing a big change in large vehicles from diesel to liquefied natural gas. That's adding to the demand for LNG. That's adding to more exports, and that's sending natural gas prices higher. Also going on right now in this U.S., remember that story about 3 Mile Island restarting from last week, the nuclear plant that was shuttered in 2019. They're anticipating a huge surge in electricity prices in the United States because of data centers, because of AI. All right. Now, I'm not going to go into my whole tirade about AI and how I think higher power prices will make things worse. But natural gas prices are rallying, anticipating some of that future demand for data centers. We're already seeing higher power prices in areas like Northwest Virginia, where they're building out a lot of data centers, but they haven't added any power infrastructure. They're trying to build new electricity transmission lines from my neck of the woods in Pennsylvania down into Virginia to bring some of that cheap PA natural gas power down to Virginia to power the data centers. So natural gas, the surge in the chart there, I think you've got a combination of the switch to LNG for the big trucks in China and anticipation of higher power prices in the United States being caused by data center build out. That is my analysis. We'll take a look at the natural gas chart tomorrow on the stream. Thank you very much, Water168. I'm going to make a note here about natural gas chart, so I'll be ready to talk to that one, and we don't have all the dead air time while I set up the chart. And thank you very much to Brojo's 420 Cafe, who says thoughts on holiday spending plus or minus percent-wise. Look, the consumer is in worse shape than he was a year ago. I think that is easily provable. Decline in savings, increase in debt. The question about holiday spending is how accommodative will the banks be? How much new consumer debt will be created to support that holiday spending? Based on what I've seen this year, right? Last year, we had a pretty good holiday season. Everybody took a lot of vacations in the summer also. This year, the summer vacations did not happen. My guess is that also translates into lower holiday spending. But that debt, the buy now, pay later, the credit card expansion, that's a big question mark. If we continue to enable the spending, if they keep raising credit limits, even though delinquencies are on the rise and rising quicker, then we'll see another good December. But the decline in vacations, hey, look, the story that's on the screen here about Southwest Airlines cutting flights, that tells me we're probably looking at a slower holiday shopping season. Thank you very much, Brojo. Good question, sir. And thank you to Wesley Rubel, who says natural gas, tropical storm Helene in the Gulf. Well, you do have a lot of LNG infrastructure. You got the Sabine Pass liquefaction, the Corpus Christi liquefaction facilities along the Gulf Coast. I believe Tropical Storm Helene is moving further east, though, so it probably won't hit Corpus Christi. Although Sabine Pass in Louisiana, that might be hit by the sides of it. I don't know if it's going to shut down, but a shutdown of LNG infrastructure would cause reduced demand here in the States, which might actually drive down natural gas prices short term, although it would drive them higher overseas as LNG production was disrupted. That being said, I don't think supply disruption being caused by the Gulf storms is really that big of a deal right now. I think it's got more to do with the supply-demand dynamics, the world marching off to a recession, plus those two big changes in the power industry that I talked about, the diesel trucks changing over to LNG in China and the data center build-out here in the States. Thank you very much, Wesley Rubel, for being a Melonhead member for 6 months. And thank you so much, P. Nice, for your generosity. Sir, I appreciate the super chat. He says, Jack, you may have to replace the tinfoil hat with genius if things keep going against the grain of the mainstream media. Well, if I'm going to get a hat made that says genius, I might as well get one made that says modest as well. While I'm at it, be fair there. But I'm going to stick with my tinfoil for now. I like the fact that, hey, tinfoil hat used to be an insult, but if you're not wearing a tinfoil hat at this point, after what we've seen in this freaking decade, then you're not paying attention. You're willfully ignorant. If you're still not donning at least a little bit of tinfoil, we'll say metaphorically, if not outright, yay, merchandising. The whole point of the tinfoil hat is like, I'm paying attention, you idiots. I'm not deaf, dumb, and blind. I see what you're doing. I see your islands in the Caribbean where you do things to children. I see the New York City COVID response guy. Remember the guy who got people fired if they wouldn't get the jab? The guy who was trying to get people arrested if they went outside in public parks? Oh, yeah. He was going to orgies and tripping balls at parties in the basement of Wall Street banks in 2020 at the height of the vid. Yeah, you wonder why I put on my tinfoil hat, because the powerful elites in this country are just – it is unbelievable the depths they have sank to in this decade. They've always been losers, dirtbags, bloodthirsty criminals, but – they're just getting so over the top now, and the way the mainstream press flies cover for them is really disgusting. Hey, journalists, remember, you're supposed to have ethics. You're supposed to speak truth to power. You're supposed to not be paid cheerleaders for these crooks. Your job is to keep them honest, and you're not doing your job. That's the only reason people like me are able to do this, because there's a market for it, because they won't. They could put me out of work in a heartbeat if they decided to start being honest for a change, but they won't. And so I will continue to benefit from that. Thank you so much, P. Nice. Appreciate the kind words, sir, and the support of the channel. And thank you, everybody, so much for having your coffee with the Melonheads this morning. I appreciate your time very much. Thank you to my Melonheads and magnanimous Melonheads on Patreon and YouTube. I appreciate the support, guys. Looking forward to talking to you guys at 4 p.m. Eastern time this afternoon on our weekly get-together on Zoom. I got links down below to all that good stuff, should you feel so inclined. Hi, Mom. Hi. Wait. I got to say welcome to Cletus. Cletus, thank you so much for becoming a new Melonhead member. I appreciate the support, Cletus. Welcome to the ranks of the Melonheads. And I got to end with, hi, Mom. Hi, Dad. I love you guys. Everybody, till next time, live small and dream big.